Hi everyone, Ben here. Welcome back to the channel. We had some big news out of the Federal Reserve yesterday. They are implementing a new asset purchase program and they're calling it Reserve Management Purchase Operations. So they're going to be buying $40 billion worth of treasuries, worth of assets for the next 30 days. And they're expecting that level to stay fairly elevated, and then they expect it to taper off after a few months. They're also stating that they're going to purchase assets sort of on a need basis. So if there's more taxes being paid by the banks, they're going to buy more assets in order to support liquidity to the market, sort of as needed. They're also rolling over any matured assets they have into new asset purchases as well. So, big news out of the Fed. They did announce earlier on that they were ending their quantitative tightening that you see here, that they were reducing their balance sheet around 9 trillion. We got down to around 6.5 trillion or so. There was some problems with liquidity in the financial sector. We started to see overnight rates spike up a little too high. And again, this is part of the theme. I did make a video on this about the paradigm shift in the Federal Reserve, meaning that they are willing to jump in there with quantitative easing or creating money pretty quickly now compared to they were pre 2008. So whenever there's some potential problems or they need to optimize the economics or the financial system, they seem pretty quick to jump in there with quantitative easing. I think this will have a very long term implication for the gold and silver price, and you have seen it react higher off of this news, but I think this will be a very, very long term tailwind for the gold price. That is the Fed creating money, trying to optimize the economy, and to trying to get out ahead of potential problems in the financial market. All right, guys, that's it for now. Thanks for watching, and we'll see you in the next one.